Hello students, say this video that I am making from the request from the student side that they would like to understand properly the bank reconciliation statement. Say in detail that I am going to explain the concepts of bank reconciliation statement, right? Even though in my tips I have given a what you call all adjustments in reconciliation statement, few of students they were not able to follow it properly. No problem. Say now we can follow and I will show you the exact method so that it becomes easy for you from the examination point of view as well as from the life point of view, because BRS is very important not only for first year PUC, even for the rest of the life when you go for job, right? So before I start, I just request all of you, those who have not subscribed for this channel, please subscribe and share among your friends, right? Now try to understand what is bank reconciliation statement or BRS. Whenever you have a difference between cash book balance and passbook balance, that is called as what you mean by bank, right? Whenever there is a difference between cash book balance and cash book balance, then for that difference, why that difference is coming, for that we have to give explanation. That explanation is called as what do you mean by reconcile. That means where the difference is coming and why that difference is coming, right? Now the next question is how it appears. It is very simple. We know that we have financial year. What is financial year? That is from 1st of April to 31st of March. Every year is called as what actually? Financial year. Assuming, let us take one example, that is 1st of April 2020 to 31st of March 2021, 1 year, where in this particular year, right, at the end of the period, that is 31st of March 2021, from 27th of March 2021, whatever the transactions that you have made might not have been appeared in the passbook or cash book for various reasons. Why? Because on 31st March 2021 we are closing. Assuming that, just let me do one small example. On 30th of March, I am going to issue a check to my friend Mr. X, rupees 5,000 rupees, right? Then when I issue that check, my friend, he receives the check, but he is not going to present that check to the bank before 31st of March. He is going to present the check on 5th of April. But on 31st of March, where when I check the balance, my balance is same. That means even after issuing the check, my balance is showing same. Assuming that I had a balance of 50,000. I have issued a check to my friend Mr. X, rupees 5,000. So what I think that means for 45,000 rupees must be the balance. This I have issued on 30th of March, whereas I assume that 30th of March or 31st of March 2021, I have a balance in the bank to the extent of 45,000. Whereas my friend has presented that check not on not before 31st March, but after 31st of March, that he has presented on assuming that 5th of April 2021. Then what happens to the balance? What happens to the balance on 31st of March 2021 in the cash book and in the passbook? Very simple. So in the cash book, it is showing 45,000. That means I have deducted that how much actually? 5,000. I am saying that my balance in the bank is 45,000. But passbook is showing that you have a balance of 50,000. That means it clearly says that there is a difference. There is a difference between the cash book balance and passbook balance. So when there is a difference between cash book and passbook balance, then we have to prepare the reconciliation statement. That means we are supposed to give reason for it, why the difference has come. Why that difference has come? I have given a check to my friend where he has not what actually taken that amount before 31st of March. That means it has come to next financial accounting year. Now the income tax authorities, they ask why there is a difference. Then I will say that check has been issued but not presented for payment. Then what happens? I have given you the symbols. Cash book balance is showing less, passbook balance is showing more. You are coming from cash book balance to passbook balance. You are coming from cash book balance to passbook balance. Then cash book balance is showing less, passbook balance showing what actually more. Then how to bring cash book balance to passbook balance? How to bring it cash book balance to passbook balance? Very simple. Cash book is showing 45,000. Then if I say that 5,000 check issued but not presented 5,000, when I issued that 5,000, if I add it, then it becomes how much actually? 50,000. Now this 50,000, the balance as per what actually? Passbook. Then this what you are writing, which is called as BRS, is called as bank reconciliation statement, right? That means what you should assume is you should have two books what actually in your mind. One is cash book, the other one is passbook, right? So from which book to which book you are coming? You are coming from now cash book to passbook. So such type of entries, when you get that difference, how it appeared, for that we prepare one statement which is called as bank reconciliation statement. Let us take few transactions like that and I will show you how it should be worked out. Now let us understand. First we should understand from which book to which book we are coming. That is very, very important. That is cash book to passbook or passbook to cash book. This is very, very important. That means we can say that from cash balance to passbook balance or passbook balance to cash book balance. It is one and the same. Right? When I say cash book to passbook means cash book balance to passbook balance. Passbook balance to cash book balance. Right? So here let us take just to understand 3 or 4 transactions. I will show you the cash book and passbook. Cash book and passbook. Then we will come to know. So let us say first cash book balance is showing 40,000 on 31/3/2021. 31/3/2021. But there is a difference. There is a difference. So let us say, what is the difference? Number one, a check for rupees 3,000 issued to a supplier, but he has not yet presented for payment. Presented for payment. Now let us take, say here assuming it is cash book, right? Here you assume it is passbook. Passbook, right? So you know that cash book means here it is cash book. It is called as debit side and what actually the credit side. Debit side and credit side. And you know that passbook, how it will be passbook. I will show you the real passbook, right? Real passbook, right? That is debit withdrawals, credit deposit, then balance, debit or credit. This is passbook. Then here it is called as what actually the date, then particulars. I have written the passbook only so that you will understand very clearly. Now on 31/3/2021 we had a balance of how much actually? 40,000. On the same day I have issued a check for rupees how much actually? 3,000 by supplier. 3,000 I have issued. Then on that day it has become how much actually? 37,000. So 40,000 is the total. So by balance carried down, to balance brought down, 37,000. It is on 31/3/2021. Because when I issue the checks, I assume that he has taken the amount. But on 31/3/2021, right, the bank is showing 40,000 only credit balance. 40,000 only credit balance. Whereas now here you see on 31/3 it is showing 37,000. Here it is showing 40,000. Now there is a difference. Then what I have written, that is cash book balance to, I am coming from cash book balance to passbook balance. So cash book balance is showing less, but passbook balance is showing more, right? Then how to bring it cash book balance to passbook balance means, what is the symbol that here you are showing? Increase. Increase means add. Increase means add. To add what? To add to the cash book. So cash book balance is earlier is 37,000. Check issued but not presented 3,000. Then it becomes how much actually? 40,000. It is balance as per passbook. This is balance as per cash book. So this type of transactions you have to assume here itself. Then such thing that what happens is called as, what do you mean by bank reconciliation statement? Now I will get you one more example. Deposited rupees 10,000 check to the bank on 29/3/2021, but credit has not yet taken place till 31st March 2021 in the passbook. So let us take the same. Say we had 40,000 rupees cash book. We had cash book, what actually 40,000. When you deposit another, what you call 10,000, 10,000 you added, right? So what you feel, you have a balance of how much actually 50,000 on which date? On 31/3/2021. You say that you have a balance of 50,000. But passbook balance is showing how much? Passbook balance is showing only 40,000. Passbook balance is showing how much actually 40,000 because still it has not yet been credited. Then you are coming from cash book balance to passbook balance. So cash book balance is showing what actually more, but passbook balance is showing what actually less. Cash book balance is showing more, but passbook balance is showing what actually less. Then what you have to do, you have to bring cash book balance according to passbook balance. That means here it is decrease means less. Decrease means less. Then what I will do, 50,000 was the balance as per cash book, right, minus 10,000 which has not yet been till credited. Then again it becomes how much actually 40,000, that is as per what actually passbook. Now cash book balance has been brought back to the passbook balance. Then this is called as what we mean by BRS, that is bank reconciliation statement, right? So I'll get you now few entries like that, then you will understand. So students, now what you should understand is there are several transactions like that. Number 1, check issued. Number 2, check deposited. Number 3, deposited directly into the bank. Then bank interest credited in the bank. Bank charges debited in the bank. Wrong credit in the bank. Wrong debit in the bank. Then as per standing instruction, amount has been paid. Likewise, several transactions are there. Then what you should do, for each transaction, you should assume cash book and passbook. Cash book and passbook. What happens in the cash book? What happens in the passbook? So let us work out 1 or 2 problems so that you will understand. Here I have taken one problem. The cash book shows a bank balance of rupees 7,800. That means cash book. Cash book shows a bank balance of 7,800. On comparing the cash book with passbook, the following differences were actually noted. Check deposited in the bank but not credited rupees 3,000. Whenever I deposit the check, then first I assume what actually, that is cash balance has been what actually increased, but passbook has not actually changed, right? Check issued but not yet presented for payment 1,500. Check issued, whenever I should check, then automatically my balance what happens actually reduces, but he has not presented, again it is showing more. Insurance premium paid by the bank rupees 2,000. This is called as standing instructions. What is standing instructions? I will make standing instructions to the banker that you please pay my insurance premium regularly on these months, right? So as per a standing instruction, from my account they will pay. I have forgotten. I should have taken that one, but I have forgotten. Then once they pay, assuming I have 10,000 rupees, when they pay 2,000 rupees, automatically my balance will become 8,000 rupees. That has not taken place what actually in cash book. Bank interest credited by the bank rupees 400. So bank automatically in a year 4 times quarterly that they are going to credit the interest automatically. So when you get interest, then what happens? Your balance in the passbook increases, but no entry has been made in what actually cash book. Then bank charges rupees 100. So you have taken some services from the bank, right? When you have taken some services from the bank, for that they are going to charge. When they charge, automatically my amount will be reduced, correct? Directly deposited by a customer into bank rupees 4,000. So when customer deposit the amount directly to bank, my account balance apparently increases, right? So I have given you a few transactions. So let us start one by one, then how to work out that one, then we will come to know what it is. So they have given what actually a cash book balance. Cash book balance they have given how much actually 7,800. So first you note this one. That means they have given cash book balance. So you are supposed to arrive at what actually? Arrive at passbook balance. You are supposed to arrive at what actually? Passbook balance. So I am going to write a symbol like this: cash book balance to passbook balance. That's all. First cash book balance to passbook balance. Then what I should do? So first transaction, when I say that check deposited into bank but not credited, check deposited. So when I present that check deposited, very simple. I assume that my cash book balance has increased. My cash book balance has what actually increased. Has it increased in the passbook? No, it has not increased. It is showing less. It is showing less. So when I say that cash book balance, when I issue the deposit check, then I say that cash book balance has increased, but in the passbook it has not increased. That means I have to bring cash book balance to passbook balance. Then what happens? Cash book balance is showing more, but passbook balance is showing less. This less is called as, what do you mean by less? So less, how much I should less? 3000 rupees I should less. This is first transaction. Then second transaction. The second transaction, it says what? Check issued but not yet presented for payment. Say check issued. Check issued. Whenever I issue a check, then naturally my amount what happens actually decreases. Right? I have 10,000 rupees. I have issued a check for 1,500. Means then naturally my cash book balance what happens actually decreases. That means I assume that balance has been decreased in the passbook also. That means this is decreased. But passbook balance is showing more. Why? He has not taken that amount. So this is called as, what do you mean by which is showing increase, which is called as what actually? Add. Add how much? 1,500. 1,500. Now, insurance premium paid by the bank rupees 2,000 as per the standing instruction. So they pay on behalf of me, that is insurance premium. Insurance premium. When they pay the insurance premium, I have forgotten, but immediately in the passbook what happens? The amount has been reduced. But anything has taken place in the cash book? No, cash book is showing more. Why? That is premium has been done as per instructions, right? So it is showing what actually? More. Cash book balance is showing more and passbook is showing less. Why? It has deducted, but here we have not deducted. In cash book we have not deducted, but in the passbook has been deducted. Then it is showing less. That is decrease is called as less. How much it is? 2,000. 2,000. Next transaction. Bank interest credited in the bank rupees 400. So bank has given interest. Bank has given interest. Interest credited. Interest credited. When interest credited, then passbook say that yes, it has increased. Assuming I had 5,000 rupees, 400 rupees interest credited, then it becomes 5,400. It has increased. But nothing has taken place. That means it is showing less. It is showing what actually? Less. Because we have not taken that what actually the amount. Unless we refer the passbook, till that time we never knew the bank has credited what actually the interest. So cash book balance is showing less, whereas passbook balance is showing more. It is add, which is called as add. How much actually? 400. 400. Next. Bank charges rupees 100. Bank charges. Say bank has given some services. When it has given some services, then automatically they take service charges. When they take service charges, then it is very simple. Passbook balance is showing what actually? Less. Assuming I had 5,000, 100 rupees they have taken bank charges. Then it becomes how much actually? 4,900. So passbook balance automatically is showing less. But in the cash book, we have not taken, which is showing more, which is showing what actually? more. So it is what actually more, but in the passbook it is showing the less. So this is less. How much? It is 100. Then take the last one. Directly deposited by a customer into bank rupees 4,000. Directly deposited means what? Assuming that somebody knows, my customer knows my bank account. Now we have Google Pay, we have Phone Pay, we have everything. Directly it will be amounted credited. Even with a Pani Puri wala that we have what actually they all digital things which is going on. When such a thing is there, through account, right, through beam account, one can transfer from one account to another account. So he has deposited a direct deposit by a customer. That means when he deposit, then naturally passbook balance is showing more. Assuming I had 10,000, he has deposited another 10,000, then it becomes exactly 20,000. That means passbook balance is showing more. Say here the customer has deposited 4,000. Assuming I had 5,000. 5,000 plus 4,000, it is how much actually? 9,000 is showing passbook. Whereas cash book is showing less. That is how much it is showing? It is only 5,000. But passbook is showing more. So here it is increase. It is called as add. How much actually? 4,000. Then what you have to do? How many add? How many less are there? 1, 2, 3 adds. 1, 2, 3 adds. 1, 2, 3 less. So 3 add, 3 less. We did this what actually now the calculation part to understand this one. Now we will prepare reconciliation statement. BRS as on. It takes only 3 minutes time when you write the calculation part separately. In the examination, don't write text. You use the scale and pencil. I should have, but it takes a lot of time. That's why I am writing on the pen, in the pen only. So it is very simple. Particulars, then amount, inner column, outer column. So first you are coming from cash book balance to passbook balance. Passbook balance. Balance as per cash book. Balance as per cash book. 7,800. Add. You take all add first. First add, you just see, you come here. What is that? Check issued. Number 1, check issued but not presented for payment. Presented for payment. How much? 1,500. One add is over. Please took. Then another add, interest credited 400. Second one, interest credited in the passbook but not in the cash book, 400. Second add is over. Next, fourth, 4,000 rupees. What is that? Direct deposit. Direct deposit in the passbook but not in the cash book, 4,000. Add. Now 3 items. Add 4,000, 5,000, 5,900. 0, 0, 7, 13. Right. Now add is over. Now we have 3 less. 1, 2, 3 less. Less. Number 1. Check deposited but not yet what actually credited. How much actually? 3,000. Number 1, check deposited but not yet credited, that is 3,000. Inner column, one less is over. Next less is 2,000, that is insurance premium. Insurance premium paid by the banker, that is as per standing instructions, 2,000. Second less is over. Then last less is bank charges, rupees 100. The third one, bank charges debited in the passbook, but not in the cash book, 100. Third, you see, 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. So add, it is 5,100. 0, 0, 6, right? 7, 1 minus 6, 13, 8. Balance as per passbook. Now we have one thing what actually in your mind. What is that? Sir, you have done cash book to passbook, but in the examination, if they give passbook to cash book, then what I should do? Don't worry. Very simple. You write all the transactions that is from cash book to passbook only. Then what they have given from? They have given from what you call passbook to cash book, right? What all symbols here you have written, if you just reverse it, then it becomes what actually passbook to cash book. So let me just take that. Check deposited, cash book increases, passbook decreases. Here it is less. But when you are coming from passbook to cash book, passbook is showing less, but cash book is showing more. Then what you should do? Add. Then what happens here? Earlier it is showing less. Now here it is showing add. That means the whole thing becomes actually reverse. That means here check issued, add will become less. Then insurance premium, less will become add. Interest credited, add will become less. Bank charges, less will become add. Direct deposit, add will become less. Why? You are doing passbook to cash book. So students, what I am telling you is, I am making just very clear. Don't remember both the things. You just remember cash book to passbook and you see the signs. Then assuming that they have given from passbook to cash book, then you just reverse it. You write like this only, then reverse it, then all add will become less, less will become add. So that is very, very simple. Now students, one more problem I have given. That I am not going to work out. What you have to do is, it is a homework for you. I will explain everything, but you do it on your own. It becomes easy for you. From the following particulars of Mr. Vinod, prepare bank reconciliation statement as on 31st March 2017. Bank balance as per cash book. Very simple. When you say cash book, that means you are coming from cash book to passbook. Understand that one. You are coming from cash book to passbook. Right? Checks issued but not presented for payment rupees 6,000. Very simple. Whenever you issue a check, then cash book balance will be showing less, passbook balance will be showing more. Then what you should do? Add. Dividend on shares collected by the bank and credited in the passbook 8,000. The dividend collected on shares. I have purchased shares. For that the dividend has been given. When dividend has been given means the profit. When you get profit, then what happens? Your passbook balance increases. Cash book balance is showing less, but passbook balance is showing more. Add. Bank charges debited in the passbook rupees 400. I have already told you, you have taken service. For that service, they are going to charge. So whenever they charge, passbook balance automatically comes down, whereas cash book balance is showing more. Then what is show? Cash book balance is showing more, passbook balance is showing less. Deduct. A check deposited into bank but not collected by the bank. So somebody has given check, I have deposited, but it has not been collected before the due date. Then what happens? It is very simple. Cash book balance is showing more, but passbook balance is showing less. Interest credited in the passbook only rupees 500. Interest credited means, then very simple, passbook balance is showing more, cash book balance is showing less. That means cash book balance is showing less, passbook balance is showing more. Then add. Insurance premium paid directly by the bank under standing instruction. That is advice. That is as per standing instruction. The correct sentence we are supposed to use, as per standing instructions. Now those words has gone out of the dictionary only. It is called as per standing instructions. That is, it is 1000. When the insurance premium paid directly, it is very simple. Cash book balance is showing less, that is more, but passbook balance is showing less because it has reduced. When naturally it will be less. So you practice on your own like this, then it becomes easy. If you need, then you write to us, then we'll work out 2 more 3 problems in the next issue, right? So once again, I request those who have not subscribed for our channel, kindly subscribe. I hope that you are enjoying the teaching from this channel. Thank you.